Semiconductors are the hidden heart of modern technology. These tiny electronic components, often called chips, are truly indispensable. They power the smartphones we carry in our pockets. They manage the complex systems in our cars. Computers from vast data centers to personal laptops cannot function without them. Even household appliances like smart fridges and washing machines increasingly rely on these sophisticated pieces of silicon. The global economy itself is deeply intertwined with their steady supply. The creation of these chips is an incredibly complex process. It involves some of the most advanced manufacturing techniques ever developed by humankind. Companies specialize in different parts of this process. Some design the chips, others, known as foundries, fabricate them in highly controlled environments called fabs. This global supply chain is intricate and has, until recently, operated on principles of international cooperation and specialization. This delicate balance is now facing unprecedented strain. Understanding the significance of semiconductors is key to grasping current global events. They represent a critical technological battleground. Nations recognize that leadership in semiconductor technology translates directly into economic strength. As devices become smarter and more interconnected, the demand for more powerful and efficient chips continues to grow exponentially. China has watched with growing concern as access to foreign semiconductor technology becomes restricted. The nation relies heavily on imported chips and manufacturing equipment. This reliance is now seen as a critical vulnerability. In response, Beijing has reportedly initiated a bold strategy. A massive $75 billion national fund has been established. This fund aims to accelerate China's domestic semiconductor industry. The goal is clear: achieve self-sufficiency and reduce dependence on foreign suppliers. This significant financial commitment signals China's determination. The funds are expected to pour into research and development. They will support domestic chip design firms. Investment will also target the creation of advanced Chinese manufacturing facilities. The plan involves nurturing local talent and attracting experts from overseas. China understands that simply spending money is not enough. Building a cutting-edge semiconductor ecosystem requires time, expertise, and overcoming immense technical hurdles. The move comes as companies like ASML and TSMC face increasing pressure regarding their dealings with China. ASML, a Dutch company, makes unique machines essential for producing the most advanced chips. TSMC, based in Taiwan, is the world's largest contract manufacturer of chips. China has been a major market for both. The United States is limiting China's access to advanced semiconductor technology. The Biden administration intensified these measures in early 2025. New regulations expanded on previous export controls. These rules prevent advanced chips from reaching China. The focus is on chips for AI and military applications. Washington views China's tech rise as a national security risk. This stance shapes global chip trade. The U.S. Commerce Department is explicit about its concerns. Advanced AI capabilities could enhance an adversary's military decision-making. This includes improvements in planning, logistics, and autonomous weaponry. Controlling these technologies is paramount. New guidelines introduce tiers of chip restrictions. These grant friendly nations full access while limiting others, targeting China. American controls have a far-reaching impact. They affect U.S. and international firms using American technology. This includes key players like ASML in the Netherlands. The Dutch government, aligning with U.S. policy, implemented new export controls for ASML. Effective from April of this year, ASML must now apply for licenses to export certain advanced lithography tools. These tools are crucial for making the most advanced chips, and China is a significant market for them. The rationale behind these U.S. actions is multifaceted. It is partly about maintaining a technological edge over a strategic competitor. It is also about preventing capabilities that could threaten U.S. interests or those of its allies. ASML, the Dutch manufacturer of critical lithography equipment, finds itself in a precarious position. The company holds a near monopoly on extreme ultraviolet (EUV) lithography machines. These machines are indispensable for producing the smallest, most powerful chips. Under U.S. pressure, the Dutch government has restricted ASML from selling its most advanced EUV systems to China. This has significant implications for ASML's business and China's technological ambitions. The restrictions have extended beyond just EUV. Sales of some of ASML's less advanced deep ultraviolet DUV lithography technology to China have also been curtailed. Chinese companies like SMIC and Huawei have relied on these DUV machines for their own chip production efforts. ASML's chief financial officer Roger Dassin acknowledged in late 2024 that U.S. export restrictions would contribute to lower sales. China accounted for about a quarter of ASML's total net sales in 2023. This figure is expected to drop to around 1/5 in 2025. This reduction in sales to China has had a tangible impact. ASML reported disappointing guidance and slashed its sales forecast for 2025. This news led to a significant drop in its stock price in October 2024. The company's leadership is navigating a complex geopolitical landscape. ASML President and CEO Christophe Fouquet has stated that the U.S. export ban on EUV machines could set back China's semiconductor industry by 10 to 15 years. TSMC's balancing act record profits amidst rising tides. Taiwan Semiconductor Manufacturing Company, or TSMC, remains a dominant force in the global chip industry. Despite the geopolitical turbulence, the company has reported strong financial results. In October 2024, TSMC announced a record third-quarter net profit. This surge was largely driven by robust demand for advanced chips used in artificial intelligence. The company's advanced process nodes, such as 5nm and 3nm technologies, are highly sought after by leading tech firms worldwide for their AI applications. TSMC's success highlights the critical role it plays. It is the world's largest dedicated semiconductor foundry. This means it manufactures chips designed by other companies known as fabless companies. Its technological leadership and manufacturing capacity are unparalleled. As of late 2024, TSMC's share price had seen significant gains, reflecting investor confidence in its continued growth, especially in the AI sector. The company also forecasted strong revenue for the fourth quarter of 2024, indicating sustained momentum. However, TSMC is not immune to the geopolitical pressures. The U.S. is encouraging major chip producers, including TSMC, to enhance scrutiny of their customers. This is to prevent advanced technology from being illicitly diverted to entities in China that are under U.S. restrictions. The discovery of TSMC-produced components in a sophisticated chip from China's Huawei in late 2023 raised alarms in Washington. The Great Decoupling? China's uphill battle for self-reliance. China faces a formidable challenge in its quest for semiconductor self-sufficiency. The restrictions on accessing advanced foreign technology, particularly from ASML, create significant hurdles. ASML's CEO, Christophe Fouquet, estimated that the denial of EUV lithography machines could delay China's semiconductor industry by a decade or more. These machines are essential for manufacturing chips at the cutting edge, such as 5nm and 3nm nodes. Without them, China's ability to produce the world's most advanced chips domestically is severely hampered. The country is currently reliant on older DUV lithography tools, some of which are also now subject to stricter export controls. While Chinese firms like SMIC have made progress using DUV for relatively advanced chips, reaching the absolute forefront of technology without EUV is considered extremely difficult, if not impossible, with current knowledge. The $75 billion investment fund is a clear signal of China's intent to overcome these obstacles. However, industry experts caution that money alone cannot buy technological parity overnight. Semiconductor manufacturing involves decades of accumulated knowledge and highly specialized skills. Despite the bleak outlook painted by some, others suggest China should not be underestimated. Mr. Fouquet himself has also acknowledged that China might eventually develop the capability to produce 5nm and even 3nm chips, despite U.S. restrictions. Global tremors. How the chip war reshapes tech industries. The escalating chip war between the US and China is sending tremors across numerous global tech industries. The immediate impact is felt in the supply chains. Companies that rely on a smooth, predictable flow of semiconductors are now facing greater uncertainty. This affects manufacturers of smartphones, computers, automobiles, and a vast array of consumer electronics. The restrictions and the drive for national self-sufficiency are leading to a re-evaluation of sourcing strategies. Diversification and regionalization of supply chains are becoming key priorities for many businesses. The automotive industry, for example, has already experienced significant disruptions due to chip shortages in recent years. While those shortages were driven by pandemic-related demand shifts, the current geopolitical tensions add another layer of complexity. Car makers are increasingly reliant on advanced chips for features like autonomous driving and in-car infotainment systems. Restrictions on chip access could slow down innovation or create disparities in technological adoption across different regions. Companies may need to design products based on chip availability rather than optimal performance. Artificial intelligence development is another sector profoundly affected. AI relies heavily on powerful, specialized chips for training complex models and for inference tasks. The US controls specifically target China's access to these high-performance AI chips. The new Cold War chips is the currency of power. The struggle for semiconductor supremacy is a central theater in a new kind of Cold War. Unlike the ideological battle of the 20th century, this rivalry is over technological dominance. Chips are strategic assets. Control over their design, production, and supply translates into economic leverage and global influence. The United States and China are the primary protagonists in this drama. The US views China's rapid technological advancement as a challenge to its global leadership. Export controls are key to slowing China's progress in critical technologies. This is about the balance of power in the 21st century. Forging the future, innovation and uncertainty in the semiconductor age. The semiconductor industry's future is uncertain, influenced by geopolitical tensions and strong AI demand. Companies like TSMC thrive but must navigate international politics. Governments push for supply chain resilience, investing in domestic production. This could lead to a diverse manufacturing base but risks market fragmentation. Innovation continues but its direction may change. The semiconductor saga underscores that technological leadership is fleeting and fiercely contested.